Hello, class, and good evening. My name is Brandolyn Gordon Whitty, and this is my financial analysis project. So, my project overview will include the economic analysis at the international and national level, a capital market analysis, an industry analysis, a company analysis of Apple Incorporated, and included in that analysis, we will be discussing their management, balance and income ratio analysis, and the final evaluation of the company overall. Alright, so to begin, we will be starting with the international economic analysis. So in the middle of the screen, you can see a chart with the latest growth projections starting in the year 2019 and the projected growth for 2020 and for 2021. So for 2015, as you can see in the far right side, the global GDP increased by 3.8%. It increased by 2.4% in the advanced countries, and it increased by 4.7% in the developing countries. The global GDP in 2016 increased by 3.7%. It increased by 2.3% in advanced countries, and it increased by 4.6% in developing countries. In 2017, it increased by 2.9%. In 2018, it increased to 4.9%. The GDP dropped by 3% in the developing countries, and it dropped by 8% in the advanced countries. In 2019, the advanced economies increased by 4.8% in GDP, and the developing countries increased by 5.9%. Alright, so next we have the national level of the economic analysis. So the American economy is a free market private enterprise system that has only limited government intervention in areas such as healthcare, transportation, and retirement. The United States accounts for only about 4% of the world's population. However, its GDP is 26% of the world's total economic output. So in the chart on the screen, you can see the GDP percent growth from the years ranging from 2008 to 2018. And you can see each year it always grew. It never decreased from the years 2015 going on. So we will talk about the capital market analysis. The U.S. capital markets are where investors, small and large, can put capital to work to drive innovation, economic growth, and job creation. The U.S. corporate bond market is the largest in the entire world. There are nearly 12,000 companies that issued $1.7 trillion in corporate bonds in the United States to fund their operations and growth in 2017 alone. So we're going to do an industry analysis now. The industry that I chose was the retail industry because it is the industry that I am the most familiar with business-wise. So the U.S. retail industry is a sector in the economy that is composed of companies engaged in the selling of finished products or various services to consumers to earn a profit. In 2019, the total revenue of the retail industry totaled at $3.763 trillion, with the retail industry being the seventh highest profiting industry in the entire United States. The competition is very high. There are many different retail industries, and they all provide different services, and the competition lies when we have multiple retail companies and services that provide the same service or the same types of product, and that's where a lot of the competition lies because they're always trying to do better and get more profit or more customers per se than the other places that are selling the similar products or services that they have. All right, so we are going to do a company analysis that happens to be in the retail industry. I chose Apple Incorporate. It is one of the most successful retail industries in the entire world. Apple is international. It is very successful at the national level as well in the United States alone. So, Apple Incorporated's business is to sell products such as cell phones, tablets, laptops, desktop computers, and other types of mobile technology with their own professional software applications and operating systems. They have a series of products, including the Macintosh, which is a desktop computer, the MacBook, which is a personal computer, an iPod, which is a type of MP3 player, the iPhone, which is a smartphone, the iPad, which is a tablet, and Apple Watch, which is a smartwatch, and Apple AirPods, which are a type of wireless earbuds. So Apple has its own hardware and operating system, applications, and services that are made special and only compatible with Apple products. Apple knew what it was doing when they started creating their products because a lot of their services and systems intertwine with each other. So normally when you have more than one Apple product, they all work together in unison. They are Bluetooth compatible with each other. They can connect to each other. So therefore, a lot of that information will be shared between your different devices. So if one was to shut down, you can actually back it up on another device using their software and their operating systems to get that done. So company management. Tim Cook, which is pictured on the left, became the CEO of Apple in October of 2011 after the death of Steve Jobs, who is pictured on the right side, who was the CEO and founder of Apple Incorporated. So they also have an entire team of executive officers and a board of directors for the company. Their board of directors is composed of a lot of their shareholders and the people who own most of Apple stock, and their executive officers all have different positions down from corporate technology level down to owning and operating the retail stores. So here is a short business evaluation of the company. To make this short, they have 37 analysis offering 12-month price forecast for Apple, which has a median target of 116.25 with an estimate of 150 and a low estimate of 80. Their median estimate represents an increase of 3.75% from the last price of 112.05. So here is a simple balance sheet for the last 5 years of Apple, and those years are 2015 through 2019. So as you can see in each column, they have their assets, and within those assets they have non-current assets and current assets and the total of the assets. And then they have their equity and liabilities, and in there they have their equity, which is their own capital, combined with the common stocks, which makes up their total equity, and their current liabilities and total non-current liabilities and total current liabilities. So here are some pie charts to show the comparison of their non-current assets versus their current assets. In the first year, their asset ratio was 69.2% of non-current assets to 30.8% of current assets. In the third year, it was 65.7% to 34.3%. And then it was 51.9% to 48.1% in the fifth year. And here on line 1, you can see their current assets increasing between 2015 to 2019. And the green line shows the non-current asset increase from 2015 to 2019 as well. So now we have the structure of the liabilities, which is composed of their equity, the non-current liabilities, and the current liabilities. In the first year, the ratio shows 58.2% of equity, 12.8% in non-current liabilities, and 30.9% in current liabilities. In the third year, is showing a ratio of 53.9% to 12.9% to 32.4%. And in the fifth year, you see the same thing of the 46.4%, 17.3%, and then 36.2%. So here is the liability trend. The first line, which is the blue line, represents the equity trend from the first year to the fifth year. The green line is representing the non-current liabilities, and the third line, which is the red line, is showing the current liability trends. So here is a simple income statement for those same 5 years for Apple, showing their revenues, their expenses, their income before taxes, income taxes, and their complete net income for those 5 years. Here is the structure of expenses. So the first part will be showing the operating expenses, and the second is the selling and administrative expenses. The percentage in the first year is the 91.9% in operating expenses compared to 8.1% in the selling and administrative expenses. The third year is 91.6% to 8.3%, and in the fifth year it was 91.4% to an 8.5%. As you can see with their operating and selling expenses, they did not really change that much. They pretty much stayed pretty consistent, considering that they stayed in that 91% range and that 8% range. Here is the revenue, expense, and income trend that you can see. The first line represents revenue, the second line represents expenses, and the third line represents the income. Here is a quick Excel of the ratio analysis. You can see the different ratios and the different types of ratios that are in here, and they are grouped differently. And here is the rest of that ratio analysis filled out and grouped together. So my final evaluation of Apple is, I believe that Apple Incorporated is a strong, financially stable company. They have a very strong team that allows them to be ahead of the competition. They continue to update and better their products and services to continue keeping their customers happy and ensure that they will keep using Apple products. They have shown consistent and continuous growth in their industry, which helps them keep a bright future. Now, however, it would probably not be wise to buy into Apple shares until the company can find a better way to utilize its cash, or until the share price is decreased to a more reasonable price. That is the end of my presentation. Thank you guys for your time, and I hope you enjoy the rest of your semester.